Hey guys, welcome back to Father and Son Investing. As we roll over 2021 into a new year, 2022, on this New Year's Eve, a lot of us are now thinking about what we'd like the new year to be like. Well, maybe we're not thinking about that quite yet. Starting tomorrow, we'll start thinking about that. Tomorrow morning, you're going to wake up and think, I need to eat better, or I need to sleep better, or I've got to exercise more, or a million other things that you wish that you could be like. Now, of course, many of us are going to commit to doing those, and then 3 weeks later, we will have forgotten about them. One other thing that hopefully most of us will be thinking about is our financial situation and where we'd like to be at the end of the year. Of course, one of the things that we should do is figure out what some of our expenditures are going to be for the year, especially some of those big expenditures. Now, many of you may be thinking that you'd really like to have a new car. Did you know that the average car payment in the United States for a new vehicle is almost $580 a month? $580 a month. And a used car is just about $400 a month. Now, my youngest son has been pestering me for a while to buy a Tesla. Yeah, a Tesla. You know, I think Teslas are really cool looking. I haven't bought one yet, mostly because I would like to see the mileage that the car can do on a single charge get better. It certainly has gotten a lot better, but I mean better, like, 800 miles on a charge. To appease my son, though, I did buy some Tesla stock. We're going to play Let's Make a Deal here for a minute. Let's Make a Deal is a game show in the United States where, you can choose behind door A or what's behind door number B. So I'm just going to tell you what's behind each of the doors. Behind door number A is a brand new vehicle costing about $30,000. And it's going to run you a car payment of about $580. I'll show you how I got to that. Behind door B is putting off buying that brand new vehicle. And instead of getting a brand new vehicle, you're going to make the same payment, $580 a month, and continue to drive whatever old vehicle you already have. In return for that, you're going to get a brand new vehicle every 5 years, potentially for the rest of your life. How am I going to make that possible? Let's talk about that. All right, a number of months ago, I did a video about QYLD. That is the NASDAQ 100 Covered Call ETF. I'm not going to explain entirely how that works because you can go back and watch my video about that. But essentially, this ETF seeks to track the NASDAQ 100, and it uses a covered call strategy in order to generate some extra cash. With that extra cash, the ETF then seeks to return that back to the investors in the form of a dividend or something called return of capital. Again, we're not going to go into all of that with this video. Just know that you're going to be getting paid every month. That's right, this ETF pays you every month. Now, just how much does it pay? Because it pays on a monthly basis, the amount each month can vary, but essentially, if we look here at some of this paperwork here, as of 12/30/2021, the distribution yield was 11.91%, meaning that if the dividend return is the same as it was this month for the next 11 months thereafter, you would get almost 12% as a dividend. Now, could we expect that? If we look at the average, it's going to be really, really close to that. Since the fund inception, which I believe was in 2014, if I remember correctly, the total return, the cumulative return, has been 93.4%. So that's going to be really close to 12% per year for 8 years. So I'm going to show you how I arrived at these numbers that I'm going to use in a spreadsheet that I'm going to show you that will just give you exactly how you can go about getting that new car every 5 years. All right, so this is coming from a website, mortgagecalculator.org. We're not going to do a mortgage. We're going to do a car loan calculator. We're going to swing down here to the bottom. It's been a long time since I've bought a new car. My wife and I drive a 2007 Ford F-150, and we drive a 2014 Mazda CX-5. So I was out of touch with what car loan rates are right now. Surprisingly to me, they're in the 5% range at almost 6%. Now, this is for a 5-year loan, and if you notice, I've put in an amount of $30,000. That's probably right about, average for what people are buying as new. And at 5.71%, you're going to come out just about $580 a year. So what I've done here is used the future value formula within Excel and modified it here to fit our particular situation. Now, I'll tell you why I chose QYLD for this. It makes some of the math easy. Now, it's not totally easy, but QYLD, the NAV price, the actual value of the stocks that are within the ETF, has not changed that much since its inception. We go all the way back to 2014 and it started out at 25.50 and we fast forward to today and it's 22.19. So the price has been coming down. We'll see there are periods in there where the price has gotten back up. But over 8 years, it has been relatively, I use the word relatively, the same. So how does it make the math easier? Well, on this particular formula, I haven't factored in the growth of the stock itself, the growth of the ETF. We're just looking at the dividend payment, okay? But keep in mind that depending on how the price of the ETF shares go up and down, it would change the numbers on this. All right, so remember I said that the average car payment is $580. $580. So there we are. That is our payment. $580, that would be the car payment. Now, again, you get to pick, you can have your car and start paying $580 for it a month right now, or potentially if you will forego that for the 5-year loan, that would be 60 months. Let me show you then how you can have a new car every 5 years. All right, just so that you can double check my math here, if you choose, you can All right, so in the process of editing, I actually found my own math error, so I've gone ahead and corrected that. So here are the new numbers. In this case, you're going to put down $3,000 as if you were buying a new car. Then the dividend percentage here, we're going to use 11.5%, which is roughly what QYLD has been returning over the last 8 years. So if I take 11.5% and I divide it by 12, I come up with this 0.00958. Now, we're going to go ahead and make that $580 per month payment at the end of 12 months. We're going to be getting $89.25 back from QYLD as a dividend. I won't belabor the point. We'll jump right down to 60 months and we'll see that at the end of those 60 months, you've got more than $45,000 in your QYLD account and you're getting $431 a month in a dividend. Now, I did say that you could buy a new car, which you could do with your $45,000 if you want. You could get a pretty nice new car. However, that would defeat the purpose of this if you emptied out the account, because then you wouldn't have any more money making you dividends in order to make the next car payments 5 years down the road. So what I'm going to say is you're going to take a little bit less of a new car than maybe you wanted, but still it's going to be a nice new car at $431 a month. And you can let QYLD then make those payments for you just from dividends. In the meantime, you'll still have your $45,000. Now, if you really wanted to, you could just delay your new car purchase for another 12 months. You don't have to make any more payments. And you'll see that your dividend each month then is up to $537 a month, which gets you a significantly nicer new car. All the while, it's QYLD dividend making the car payment, and you're not having to come up with that out of your hard-earned cash that you're working for each month. Now, I hate to spring this on you, but guess what? QYLD has some fees. So we're going to talk about the fees, and I'm going to actually show you how it's going to reduce the amount of money that you're going to have every month in dividends. All right, we can see from the QYLD information that the expense ratio is 0.6%. So to make the spreadsheet math easier here, I'm going to just charge the fee every month. I'm not saying that QYLD will do that, but it makes it easier here. So what I'm going to do is reduce the dividend on this spreadsheet by 0.0005. So to make the math easy on this spreadsheet, I'm just going to charge the fee every month, but it's going to make it easier on here, and the difference isn't going to make out to be that much different if they charge it yearly or quarterly. Remember, before this was about $431. That's after these fees get applied over those 5 years, you're looking at $401. And if you, again, had some delayed gratification and went out to 72 months before you bought your car, you'd have just shy of $500, where before you were going to have about $537. That just illustrates how fees can start to add up over time. So I hope this has given you some pause to think here about whether you want to go out and buy that new car this year, or whether you'd like to delay that new car purchase, keep driving your old clunker, and let QYLD make your car payments in the future. Now, I personally am one for not having car payments at all. I think it's good to try to cash flow your car if you can, and slowly you can build that up if you need to. But again, this is one way where you can at least work this into your budget for 5 or 6 years, and then you don't have to keep this car payment in your budget. QYLD will just keep making it for you. Now, one thing we haven't talked about here is the taxes on this. It gets a little tricky. You're getting 2 different types of payments back to you in this dividend. One is truly a dividend, and the other part can be called return of capital. I'm not going to go into those here, but those get taxed different ways. Now, ultimately, I think QYLD is best held within a Roth IRA because you won't pay any taxes on that at all forever. So I like Roth IRAs anyway. In fact, with January 1st coming, I'm going to fund my non-tax deductible conventional IRA, and then once that money enters that account, I'm going to roll it over into a Roth IRA. That's called the backdoor Roth, and thus I can buy QYLD if I'd like with that new funds for the year. Now, let me just take this opportunity to wish you and your families a happy and blessed new year. I hope that 2022 works out for you to be just what you would like it to be and then some. Please share this information with a young person in your life. Help them see how some delayed gratification is really going to save them a lot of money down the road, and help them see how much that new car is really going to cost them a lot more money down the road. All of us could be in so much better of a financial situation with a little bit of delayed gratification and using that money to invest. And until next time, enjoy your investing.